Hello, Oracles. Well, we saw Tesla stock fill that $221 gap today. We've been talking about this for a few weeks now, and of course, today here we came and we filled it. Looking at the charts, we might be pulling down to that $200 level that we've been talking about as a strong level of support. So we're going to take a look at the charts, see what other gaps we have to fill below $200, if we are going to get down to those levels, what I think is going to happen potentially along the way, and the different scenarios that can play out. We'll get into all of that in just a minute. All right, so taking a look at the charts, again down 2.83% on the day, closing at 219.22. After hours, we're down another percent to 216.96 at the time of this recording. Looking at the charts, again, still in this downward channel. We have not broken below or above it. We are still following straight down with this. Volume was a little bit higher today at 120 million shares trading hands. Tomorrow, we have a lot of options expiring as well. So we'll pay attention to what volatility we might see tomorrow. So now looking at the RSI, again, this is exactly what we've been talking about. Filling that $221 gap would put us into this oversold range. We are now officially there. Anything under 30 is considered oversold. So we hit that today. Now, it's not to say that we are all of a sudden going to get some buying pressure and push up from here. We have seen us go oversold and dip even further, just like we've seen us go to overbought and rise even further. This is just one of those indicators that says we could probably see some buying pressure coming in soon, just don't know when. And now down here we have the $200 level, and again, it's a psychological support and resistance, acted as it before and will act as it again as we come down. So now nothing is saying that we are going to be coming down to that level, but based upon the trends we are seeing, we may continue down in this path. Now, we've been talking about how August is usually a rough month. We've been seeing it so far. Historically, we see corrections in the market between August and October. We've been seeing the market pulling back. We have been seeing Tesla stock pulling back. And when you're looking at gaps below us here, and when we're looking at gaps here, we have this gap down to 193.31, gap below that at 162.95. And so, again, I don't know if we are going to be filling these gaps, but when you look at some other stocks as well, for instance, Gort and I have been talking about Elf Beauty. Now, he just got into that. It has had a very nice 5-year run going on. However, Elf itself does have some pretty big gaps. They have a gap down here to 86.71, and then there's another gap even further back here to 58.58. So again, this doesn't mean that these are going to fill. Gaps fill 9 out of 10 times. Some of you have asked, some of you who are newer to the channel, what a gap is when a stock closes one day and opens the next day higher or lower than the previous day. So for instance, this here, ELF closed at 58.58, and the next day it opened up at 67.16. Now it did dip down intraday to 62.35, but that still left that gap between 58.58 and 62.35. 9 out of 10 times, gaps do fill. So looking at these two gaps here, that's 2. Not to say they have to fill. There's a lot of gaps in Tesla stock that have not filled. But like last year, we saw the majority of those gaps get filled. And so when I'm looking at multiple stocks in different sectors all over the place, with these gaps in the same general areas and the same times that they jumped, kind of leads me to believe that the entire market does have a potential to be pulling down to fill a lot of these gaps across the board. So again, this is just a potential. I don't know if it's going to happen when it comes to Tesla and whether it's going to break below that $200 level or not. To me, it's one of those things where we'll probably get close to it, may consolidate around $200, and then we'll probably end up waiting for some sort of catalyst to move us one way or the other. Whether it's Tesla specific or whether it's going to be macro environment has yet to be seen, but it's one of those things to pay attention to. And I think that's the level we will consolidate at, probably between 200 and 210. We'll sit around that level, and then maybe it's CPI and PPI data that comes out that says, we should come down. Maybe it's going to be Cybertruck news and we end up going up. So these are just the few things I'm paying attention to. Now, again, that $200 level, seeing as we're overbought right now, maybe we do dip down further, get some positivity, kind of give us a little bit of a boost in life back and push us up a little bit, and then see what happens from there. Again, then we go into The first 2 weeks of September, we get the next CPI and PPI data, and then we get the FOMC meeting right after that. We did get the FOMC minutes that came out, and many of the members are still saying that inflation is still higher than it should be, indicating that there is a potential that they may want to raise rates more. Right now, the market is not pricing any more rate hikes in. They're pricing in pauses until next year and then rate cuts. So if the Fed comes out or we get inflation data that kind of indicates the Fed may end up going up on rates, that could turn us all around again. Maybe that's what some of this sell-off was. Maybe it's because they're thinking the Fed might be going up on rates and they're starting to price that in. So we still have yet to see what's going on. Again, this is why I have created a strategy to always have cash readily available, cash flow coming in, to be able to take advantage of any sales that we see and to be able to buy the dip. People always say, oh, you're just catching a falling knife. Well, they said it all last year. I caught that falling knife all the way down to 100, bought even heavier at that $100 to $110 level. And then look where we went, up to 280. So not to say that we can't fall down again and catch that falling knife again, but when you're looking at companies like Tesla, Apple, Microsoft, Google, Amazon, all of these companies, you're really just dollar cost averaging. They say it's catching the falling knife, but nobody knows where the bottom is going to be. People like Warren Buffett never care about the macro. They don't care about timing the market. What they do is say, hey, what is my thesis on this stock? Do I think this is a good price? I'm going to buy it here. Some people buy at the bottom. Some people are near the bottom. Dollar cost averaging means that you don't have to do as much research. You've just said, this company is a good company that I want to hold long term. I'm going to be putting in money regularly. And by doing that regularly, you're going to get the best dollar cost average and cost basis you can by adding regularly. That's all it is. And historically, that has been shown to be the best way to garner future wealth and early retirement. So just saying that's a good way to go. Now, I have been looking at my dividend plays. I talk about these a lot more regularly because I've got some situations going on at my job. This is why I did not have a video out last night. I had a meeting with my guys. So a lot of changes are coming for me. And one of those things I recognize is no matter what company you work for, when they have to make a decision between you or them, they're always going to choose them. They do what's best for them. No hard feelings. I fully understand that. However, that's why we need to take care of ourselves. This is why I've been building up a portfolio of investing. This is why I've been building up a lot of dividends. So this way I have the freedom of not having to let somebody else decide what my time is worth. Because realistically, when you're working at a job, you're telling somebody else, you tell me what you think my time is worth. And if you're okay with that, that's cool. And if you're happy with your job, have at it. But I know there's a lot of people out there who are not like that. And if you don't want to do that for your entire life, in my 20s and 30s, I didn't have a problem with that. Now I'm in my 40s and I'm like, man, I don't want to be doing this forever. I wish I had started sooner. I can't go back in time, but I can look ahead and say, well, do I want to still be doing this at 63? Absolutely not. What can I do now to prevent that from happening? That's why I've started doing all the investing. That's why I'm getting myself into all these dividend plays. So again, members and patrons, I am going to be sharing that out. I might actually be sharing it out tonight. I made a lot of big updates over the last couple of days. So I'll share that with you guys. And again, if you are interested in becoming a member or patron, either one of them, even just $1 a month, for me, because I like the fact that I want to make sure that you guys can also invest in yourselves, I'm not one who's going to be charging a lot of money for this. This information I'm sharing is just what I'm doing, so it may help you in your strategy. It's not financial advice, but it could be hey, you know what? That's not a bad idea. Let me try that for myself. And for $1 a month, I will gladly share that with you guys with all of my updates. Otherwise, I will be putting those videos out at the end of each month. So every month you guys will get the update right here on this channel for free. So you don't have to worry about that either. So either way, I want to try to provide you guys with as much information as to what I am doing to improve my financial status. And right now, I was talking to Gort earlier. I'm right now pulling in just over $300 a month passively between my dividends and my CDs. I have a strategy that I'm working to go into for next month, which will push me to $500 per month. Plus, I'll be putting in $300 outside from my full-time job. So I'll be contributing $800 a month into that. That snowballs relatively quickly. And now I am trying to get a jump on it with TSLY. And again, this is following that same downward trend here that we have been seeing with Tesla. And it does have a gap down here to 1259, another gap at 1195. These may end up filling also, don't know. So really just kind of paying attention to these, but there's also a gap above it, which tells me that there's a very good chance that we will be going back up at some point. So yes, the equity value has been lost on this, and it's now less than what we have gotten from the dividends. However, over time, despite the fact that the expense fee is very high, it should come back and capitalize on this. Now, this is strictly for cash flow. As Brad Ferguson had showed us, when you look at Tesla stock versus TSLY when it's going up, you will make more money on TSLA. However, it's not a cash flow money. You'd have to time it and sell it. So for me, this is why I'm looking for cash flow. Totally different ways of playing this. That's what I'm looking at for me is strictly for cash flow. Getting the cash flow coming in, I will be putting it into a lot of other more stable ETFs and dividend stocks, just strictly because of the fact that TSLY is volatile. Heck, because we've been coming down so much, there's a chance maybe the dividend is cut in half next month. You know, it was 83 cents per share last month. We've seen it as low as 44 cents when it was coming down in April. Maybe it comes down to 40 or 30 cents next month. It can be very volatile, but that 30 cents per share is still significantly more than any of the other ETFs and stocks that I have. So again, it's just a way for me to be able to speed up the process and that snowball effect to be able to get more money into those more stable and secure ETFs and stocks that have dividends. So in the long term, I will be something more stable and have solid passive income coming in that's not going to be as volatile. That's the basis behind my strategy for the dividend plays. And again, I will do a full video on that at the end of the month to show you guys what my entire dividend portfolio looks like and what my entire strategy is. And a little note about the macro environment. So I posted out today, fear and greed index has balanced to a neutral position. We had been in extreme greed for a little while there. If you look at the graph, you'll see we have been swinging back and forth between extreme fear and extreme greed, similar to the RSI patterns that we've been seeing for Tesla stock when it's going between overbought to oversold. And here we are again in oversold. If this trend continues, we could see further pain in the market until we reach extreme fear. So looking at it here, we've got, right here in the middle at 50 neutral. So again, we were at extreme greed just a couple of weeks ago. Now we're at neutral. Looking at the timeline here, we've gone extreme fear, extreme greed, down to fear, not extreme fear, back up to extreme greed, extreme fear, crept up back to extreme greed. So again, this volatility swing is showing us that there's a good chance we may end up coming back down to go to that extreme fear level. And just a reminder from a fundamental standpoint, when you're looking at Tesla stock itself and it coming down, and I applaud you all because many of you, are holding strong. Last time we saw the stock plummeting like this, lots of people, lots of you were on here very concerned. Kudos to many of you. I have not heard really any of you say anything about the concern of it coming down. Most of you are excited about this buying opportunity. Now, why is it exciting to see this as a buying opportunity? You look at the fundamentals, especially if you're going to be a long-term shareholder. So I quoted out Jesse Dow's post and I said, Tesla cuts prices and still has industry-leading margins. Everyone else raises prices and still loses money on every EV sold. And as Jesse pointed out, the Tesla Model Y has come down almost $40,000 in price since its release. This was during a time where other automakers raised prices by an average of 50%. If you don't realize this yet, this company is going to be rocket fuel in the future. So again, we have companies, competitors of Tesla, that are coming up on prices 50% and they still lose money on every EV. Tesla comes down 40% on the Model Y and they still have industry-leading margins. This is the difference between Tesla and everyone else. So this is why, yeah, it's great. And I would love to see the competitors, and I'm sure at some point they will be profitable and they'll be in a fine business. But Tesla is just so far in the lead that they come down on prices because they can. Competition has to come down on prices just to be able to compete with Tesla. That means that they're going to be losing even more money just so they can stay in the game. And they're just hoping that they don't lose so much money that they have to leave the game entirely. That is the playing field we have right now. So yes, the stock price is coming down. Yes, maybe we get to 200. there's a potential. Maybe we break under 200. The fundamentals will remain the same regardless. So when we do come out of this, buying at these levels, fortunes are born during bear markets, getting into that point where we might be hitting bear levels. That is the time where fortunes are born, because the fundamentals of the company are going to take us out. And when we go back to bull run status, we are going to be even more bullish and come out even stronger on the other side. So that's what I've got for you guys today. Let me know in the comments below. I'm assuming some of you bought more shares today as well. Anything under $200, I will be increasing my dollar cost average to $20 a day. I'm currently at 15. So if we break under 200, I'm going up to 20 bucks. And again, with all the dividends that I have, with all that cash flow coming in, this is intentional so that I will have more cash flow to be able to invest even more money into Tesla stock. That is the entire premise behind this. And so that I can leave my job and not have to work and do what I want to do versus what I have to do. So thank you guys so much for watching. I appreciate all of your support. Have a great one.